Welcome to Bunnex Investment Group. In this video, we are going to review a very easy but powerful trading strategy. We'll use real market example, which you can as well replicate in your trading. But before we go through, make sure you subscribe to this channel and check the notification bell icon if you haven't done so. So this is to actually receive all the updates that we post on this channel frequently. So in this video, we are going to explain this in 4 parts, which are taking trading as a business. Then 2, focus on setup, not pair. So all these 2 topics are very important for you to understand the full strategy. Then make sure you stick up to the end of this video where we'll actually review or we'll actually go through over real markets to show you exactly what you need to do in order to apply this particular strategy. So the first topic is taking trading as a business. So why does many traders fail? The main reason is because they treat trading like a hobby. It's actually a side hustle, something that they do when they feel like. So trading is actually a business. And what does a business have? A business has policies, risk management, plans, and projections. And if you do not have policies on maximum daily trades to be taken, maximum daily loss to be incurred, the maximum risk per trade, maximum losses in a row, then you are not yet serious about making money in the forex trading. So for today's strategy to be efficient, make sure you have the above written down. Have a trading diary which you write down these things, or actually type it on a Word, make it a PDF, print it and stick it in your office. So you need to have these on record for you to actually have this strategy efficient in your site. Then the next topic is focus on a setup, not a pair. I know this is a very controversial topic, and I see traders focusing on one trading pair with a motive of knowing it inside out. Well, I find this as a trap. Why? Because in the period of its consolidations, what are you going to do? This will probably force you to take off-edge trades, raise your emotions, and throw away your plan. For today's topic, today's strategy actually, to work, have a basket of 6 to 8 pairs of your choice that will allow you to have diversity of choice. This will actually remove your edge to be always looking for that particular pair to play out daily. So before we jump to the full strategy, check out our free Telegram channel. I'll leave the link in the description box below, where we actually share our services as well as trading advice, setups, and all sorts of that. So here is the the strategy definition. So in this strategy, we'll be actually observing the market on the H4 time frame. Then we will require 2 indicators to actually simplify how we view the market, which are 13 EMA and 50 EMA applied to close. I received several questions in the comments section. Which EMAs are you using? They are exponential moving averages applied to close. So the criteria for buy is basically to see a 1350 EMA crossover, right? That's the first thing that you need to see. Then price flow from that crossover and retest of the 50 EMA, right? So the length of flow before the crossover must be equal to the length of flow after crossover. What do I mean by that? 13, right, crosses 50 like this. Price, right, move before the crossover to the price move after the crossover must be 50% or must be equal like that, having this part before we see a pullback to the 50. This is a very, very important factor, because if we do not follow this one, we'll actually be caught in consolidations and lose a lot of money whilst the market will be giving us fake 50 EMA retests. Then I understand it might be difficult to understand right now. Don't worry, we're going to have an example on the real markets so that you understand. Then the reward to risk ratio is going to be 1:2 or 1:1.5. 1.5. By 1, we are saying it's basically R is equal to the number of pips below structure. So we first find the number of pips below structure and then multiply that number by 2 or by 1.5 for us to get a target. So basically like that. So this was the criteria for buy, and for sell it's basically the converse of everything that we have said. So let's go over the charts to have an example of this particular strategy. Alright, so this is CHF against JPY, and I've already put it on H4 time frame, and we are going to walk through everything that I've said when we were on the slides. So the first thing that we are going to be looking for is a 1350 EMA crossover. So in my case, my 13 is the one in red and my 50 is the one in blue. So the first thing is to see a 1350 EMA crossover. Then the flow before the crossover and the flow after the crossover to the retest must be equal. In this case, we can see that this flow is not equal to this flow. Therefore, this was a skip, right? Here we had a consolidation phase. The flow before the crossover and the flow after the crossover were also not equal. So in this case, it was also a skip, right? So that is when you need several pairs in your basket so that you won't dwell on one pair for this long, right? After that, we had this crossover, right? Crossover was issued here, right? So in this case, we can see the flow of price prior the crossover and the flow of price after the crossover. Then the retest of the 50 is actually 50%. Therefore, this retest of the 50 EMA was actually valid. Why? We have actually met all the criteria. 1350 cross, flow before crossover, flow after crossover equal, and then retest of the 50 like that. So our entry, candle closure above 13 EMA, stop loss below the structure, and target multiplied by 2 or by 1.5. So in this case, you only need to actually check the markets 6 times a day, because H4 candles are only issued 6 of them in each and every particular day. Then after that, wait for another crossover. In this case, a crossover was issued here, right? A flow before crossover was this one. A flow after crossover before this happened is equal. Therefore, it's 50%. And then a retest of the 50 candlestick closure below the 13, right, was issued, and stop loss above the structure, and multiply that by 2 or by 1.5 to get your target. It was somewhere at this point if it was a 1:2, right? So why, again, I keep on emphasizing why it's necessary for us to have a flow before crossover and after crossover equal is because there are scenarios whereby we'll have consolidations like these ones that will confuse us. So we'll need to see a flow before crossover equal to the flow after crossover. So there was no trading entry at this point. Then at this point, we had 1350 crossover here, a flow before and a flow after were actually in the ratio is 50-50. This one was equal to this one, and this retest was also valid. Stop loss above the structure, and we wait to hit our target, right? In this case as well, we had a crossover that occurred here, right? Flow before and flow after were also equal, and retest of the 50 EMA was to give us an entry point. So we can as well proceed crossover, flow before, flow after, retest of the 50, and it played out like that. Here as well, we can see a crossover, flow before and flow after equal, and then retest of the 50, candlestick closure below the 50, and the trade worked out. So basically that is what you'll be looking to. Just summarize everything that we've said. Flow before and flow after crossover must be equal, and the price must come to retest the 50 and have a candlestick closure below the 13. This will mean you are only trading at closes of H4 candlesticks from the pairs, from a basket of pairs that you are monitoring. Do not just monitor one pair, focus on one pair, focus on the beautiful pattern that meets all the criteria, and you see success will actually follow you. On that note, we have come to the end of this video. Thank you for watching. Like and subscribe.